Well, hi guys, welcome to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita Khemka. Well, we are ending the note on a high, so to say, because it is a record close for the market, for the Nifty in particular, yet again. A narrow, up move. In fact, if you see compared with yesterday's close, the move has been fairly narrow, but nevertheless, it has been a record close. And for the week, mind you, the Nifty has gained around 1.5% or thereabouts, and 24,400. Remember, that was the top. In fact, that was the highest level that the Nifty reached earlier in the week. Sensex just shy of that 80,000 mark. We clocked that milestone this week itself. We've ended just shy of that milestone level. There was strength in the broader markets, after, spending the day in the red for most of the trading session. We managed to stage a very good recovery in the second half of the session, thanks to a spurt in shares of Reliance Industries, which, by the way, rallied somewhere around 2.5% or thereabouts. We managed to end in the green where the Nifty is concerned. So, it was an almost 100-point cut on the Nifty. We have recovered lost ground in today's session itself. Banks were the top laggards today, but autos, pharma, FMCG, all of these sectors saw buying interest. HDFC Bank, of course, top laggard on the back of soft, Q1 update. We saw the stock fall somewhere around 4.5% or thereabouts. The breadth was in favor of gainers, almost 3:2, the advanced decline ratio on the Nifty, on the NSE rather. If you look at some of the other movers, aside of HDFC Bank, among the losers were Titan, Tata Steel, LTI Mindtree, M&M and the likes. And on the gaining end, you also had ONGC that was clocking in a good rally, and so was SBI. Britannia and Cipla were the other names that did well. Let me, on that note, bring on board our guest for today. Joining me is Aamar Singh, who's the Senior Vice President at Angelone. Aamar, great to have you on the show. What do you make of the kind of turnaround we saw in the second half of the session? And now that, we did manage to close in the green today, do you think we could make our way towards that 24,500 mark next week itself?
Yeah, I would say that actually markets, if you look at the way the markets opened in the morning, there was a down gap and then there was a correction. But towards the end of the trading session, I would say that markets did bounce back, and as you rightly put, it was Reliance which really led the way, and because HDFC Bank was down almost 4.5%. So it was Reliance, SBI also to a certain extent, up 2.5%. So there also we saw some up move there, and even the likes of Kotak Mahindra Bank, that also was positive. So overall, I would say that markets are displaying some sort of fatigue, because the way the markets have rallied over the past few trading sessions, the short-term trend could mean that there could be some consolidation, but the overall trend on the intermediate side, on the long term, that continues to remain extremely bullish. Also, we are seeing the advanced decline that also working in favor of the bulls. Apart from that, the global cues are also, I wouldn't say there's anything negative per se. So looks like that the markets could sustain, but yeah, these are at these levels. One needs to be definitely slightly cautious at these levels. As far as Nifty is concerned, I would say now Nifty has got upside resistance around the 24,450, 500 levels. On the downside, it has got, if you ask about the technical levels somewhere around 23,950, 24,000. That's a zone of important support. If it starts trading below that level, then we could say that there's a trend change from a short-term perspective. Otherwise, the trend remains positive. So any dip should be used as a buying opportunity. If you look at I would say the OI data, we did see more of call writing happening. So that is slightly bearish, but I wouldn't read much into it till the time we see a trend being established there.
Okay, and what about, of course, you mentioned HDFC Bank, but, if you talk about the charts, we have seen analysts give targets of 1800, 1850 on the stock. But today, of course, it was below that 1700 level as well. Is there any kind of reversal on the charts? Or do you think it will remain in this range of 1700 to 1600 in the coming days until the results come out?
See, if you look at HDFC Bank from a long-term perspective, we find that the stock had earlier rallied, but it made I would say a high of 1794, but closed significantly lower at say 1648. Also, what we see is that the fall has been quite sharp for HDFC Bank over the last three trading sessions, and also the day it started from 1800 levels almost, volumes have been significantly higher. So that is okay, because at record levels you definitely see that sort of volumes. If you look at the weekly charts, there is one pattern as per Japanese candlesticks that's called a shooting star, which is a bearish pattern. What becomes very important and crucial for HDFC Bank is that it doesn't breach the 1600, 1630 level. That's going to act as a very crucial support zone for HDFC Bank. If that is breached, then we could say that a short-term top has been made. Otherwise, if it sustains above the 1700 level, then we could say that there is a resumption in the previous trend. Otherwise, we could witness some sort of consolidation.
Okay, and what about Reliance? Hit a fresh 52-week high today, 3197. That's that was conquered, of course, very close to 3200. But on the higher side, in terms of resistance levels, what would you envisage?
See, Reliance, we have been bullish for quite some time, because if you look at Reliance, the charts are very different for Reliance. So when we compare it with the other heavyweight like HDFC Bank, so if we look at Reliance from I would say a long-term perspective, very strong on the charts. Even the intermediate term trend, we've seen a trend change. From a short-term perspective, what we've seen is that when Reliance really broke out of that 3000, 3030, because I had earlier spoken on these levels, that 3000, 3030 is going to be very crucial zone. If that is taken up, then we'll witness a very sharp rally. That's what has happened. Today's also been a strong positive day. So Reliance is definitely anytime far stronger as compared to other heavyweights like HDFC Bank. So Reliance is a buy on dip, there's no doubt. Reliance has got now good support coming around. I would say 3000, 3050, that's a very strong support zone. Ideally, it shouldn't reach that level. If it reaches that level, then we could witness some further selling. On the upside, now Reliance, because Reliance has broken out of a major resistance zone for after quite some time, so there is a potential that it could rally towards the 3250, 3300 levels.
Okay, 3250, 3300 levels to watch out for on Reliance Industries on the higher side. But really the defense and shipbuilders, pack, even the railways pack for that matter. I mean, for defense and some of these shipbuilders, if you look at some of the stocks, BDL, Bharat Dynamics, Bharat Electronics, 20 to 30% up move in the last 1 month. Mazgaon Dock and Garden Reach, they've doubled in the last 1 month. Cochin Shipyard, 70% gains in the last 1 month. How would you approach these stocks now in terms of risk reward? Where do they stand?
I would say that only those investors who would be having a lot of courage, they would be entering the stocks, but they've definitely been rewarded very well. There's no doubt about it, because as you rightly said, the sort of movement that we are witnessing in Mazgaon Docks itself, we've seen close to 30-32% rally in the week itself. And it was at a point of time, it was appearing that maybe it's like fatigue is setting in, and the stock did consolidate. But then once it breached the 4600 level, again we've seen a sharp run up towards 5700 levels. Looking at the other stock, again Cochin Shipyard, similar story, up by almost 28-30%. See, what is very clear in all these I would say charts, be it Cochin Shipyard, be it Mazgaon Dock, or for that matter if you look at Bharat Dynamics BDL. Bharat Dynamics is also very strong on the long-term and intermediate-term trend. The same goes for Cochin Shipyard, Mazgaon Dock. So effectively, it means that if you are long, then you should definitely stay long. Buying at the current levels, I would say, risk reward ratio definitely the question. But for those who thought of that, they've really it's like they've not been able to get on the bus. You can say that. But better be safe than sorry. But overall, the trend is up. So on corrections, these are definitely good buying opportunities. There's no doubt about it. But at the current level, entry, I would say the risk-reward ratio might not be favorable. But there's no doubt that the long-term trend is very strong. Intermediate-term trend is very strong. Momentum is there, and it's not, I would say, weakening. So that's the key. Because if there is a decline in momentum, like Bharat Dynamics did witness some decline in momentum, so the charts or the stock traded sideways. But that's not the case with, I would say, either Cochin Shipyard or Mazgaon Dock as of now.
Okay, and what about railways, RVNL for that matter, 20% up today itself. somewhere 2-3 months ago, I think we saw some bit of breather coming in on railway stocks after the phenomenal run. But once again, they have picked up pace. Look at the likes of IRCON as well as RVNL. Both of them have rallied 30 to 40% in the last 1 month. But do you see a lot of more steam left and case to invest now again?
See, if you look at these stocks, they are definitely quoting at significant high Ps in terms of valuations or in terms of the valuation perspective. But if we look at the potential which these companies have, I think that's the major reason why we are seeing this sort of movement in defense stocks, because investors, those who are looking at it from a 3-year, 5-year perspective, they expect and anticipate that most of these companies would be growing anywhere maybe 30%, 40% on a top line basis, or maybe even higher. So if that is the case, then these valuations could be justified going forward. So, but the big challenge is of execution, how that happens. Looking at RVNL on the charts, again, it has a similar chart story as of Cochin Shipyard or Mazgaon Dock. So effectively, it means is that those who are long, they should definitely hold on to it. Entry, I would say not at the current level, the way the stock has rallied today, but yes, on dips, on corrections, this is a buying, definitely a stock to look at buying.
All right, that's the view on railway stocks. Of course, just want to point out that, India has posted the highest ever growth in defense production in FY24, so that's another trigger, that has been working out for the defense pack as well, right? The impetus on Make in India and, the government's push towards defense as well. I mean, all these things, all these factors are making, defense stocks, rally even more from here. But one stock that I also want to get your attention on is Raymond. The stock rallied to a record high on the back of, the real estate demerger nod. Of course, shareholders will be getting 1 share of Raymond Realty for every share held in Raymond. The stock is up 70% in the last 3 months, has given very good returns. Is this the time to ride the momentum here, or would you say it has? It is also showing signs of fatigue, and it's maybe perhaps entering the overbought zone now.
See, all these stocks are in overbought zone for quite some time. I would say many months. So one needs to remember that being in overbought doesn't mean that there would be a correction. So it means that the stock could remain in overbought zone for quite some time. Having said that, if you look at Raymond's, again, Raymond's is definitely strong on the charts. But today's high, something is going to play an important role. That was around 3484. So 3450, 3500, that's going to be a level to watch out for Raymond's on the upside, where we could witness some profit. On the downside, it has got good support coming around the 2850, 2900 levels. So that's a level of good support. But overall trend remains positive for Raymond's.
Okay, the trend remains positive here as well. Beg your pardon. I need one more stock, which I want to discuss with you is Shilpa Medicare. The stock was up 15% in today's session. Of course, one of its CDMO customer has reported positive result in a clinical trial of a molecule that has potential use in treating chronic kidney diseases. Now, it hopes to receive somewhere around $10 million milestone pay as the client has succeeded the key trial. 15% up move today. With today's up move, the stock has given 35% returns in the last 1 month. Stock has doubled in the last 6 months. So all these high flyers, I mean, would you still say the trend would be on the upside for this stock as well?
Yeah, I would say there's if you go back in time and look at Shilpa Medicare, so in third quarter of September 2021, the stock had made a high of 670. And if you look at today's high, that's around 677. Further, if you go back in I would say again, the third quarter of 2020, the stock had made a high of 695. And if we go back even further in December of last quarter of 2016, the stock had made a high of 786. So the key levels to watch out for this stock is anywhere between 670, 700 level. Okay. So if it takes that level out, then we could witness a further up move of anywhere between 10 to 15%, means it could try to reach its all-time highs of 786. That was in 2016. So the levels to watch out for is 670, 700. That's a key zone of resistance. If the stock is able to take that out, then there's going to be a fresh rally. Otherwise, we could witness some consolidation. On the downside, the stock has got good support coming around the 575, 80 levels. And if you ask me on the trend is definitely up. Again, this is a not at the current level because it's approaching resistance. If it breaches that resistance, then we could witness a sharp rally.
Okay.
So one can keep a close watch on this stock.
Okay, 700, key level to watch out for on Shilpa Medicare. But anything that's looking interesting for the next week on the charts, Aamar?
Yeah, if we look at some of the stocks, I would say Hudco is one stock, again, very strong, has been very strong technically on the charts, has been moving up. So this is one stock one can look at. And New India Assurance, I would say, from the insurance space, it is now starting to move up. And it has breached a crucial zone of resistance because earlier it was unable to breach the 250 level, 250, 260 zone. So having taken that out, sustaining above 260 is very important. If it sustains above that level, then we could see the stock rallying towards the 300, 320 level. So this is a stock which one can keep a close watch on.
All right, Hudco and New India Assurance, two stocks looking interesting from a chart perspective. With that, Aamar, I would like to thank you for taking out time and joining in this afternoon and sharing your thoughts with us. Look forward to our next conversation as well. Have a great weekend.
Thank you.
Thank you. Well, with that, of course, we've come to the end of closing bell. A good 1.5% uptick coming in this week. It was a week of milestones. We saw the Sensex hitting 80,000. We saw Nifty clocking in 24,400. And, for the day as well, although we were, on a wobbly turf, we managed to stage a good comeback. And for the Nifty, at least, we managed to end in the green. But with that, completely timed out from me and the entire team. Thanks a lot for watching. And, of course, have a great weekend and join us on Monday morning with the markets. See you.